You wake up before sunrise. The world is quiet. No notifications, no noise, just you, the water, and the soft hum of nature waking up. You walk down to the edge of a lake that looks like glass, perfectly still. Somewhere under that surface are fish, big ones, the kind people brag about, the kind that make the whole trip worth it. Now let me ask you something. What's the worst possible thing you could do right now? You could jump into the lake, start splashing wildly, chasing shadows, grabbing at ripples, burning energy, getting desperate. Sounds insane, right? Yet this exact behavior is happening every single day in the markets. The moment most traders open their charts, they mentally jump into the water. They start chasing price, chasing movement, chasing candles, chasing profits, clicking buttons with urgency, fear, excitement, and hope, all tangled together. And just like fish, the market senses that desperation instantly, and it pulls away. Here's the uncomfortable truth most traders never want to hear. The market doesn't respond to effort. It doesn't reward intensity. It doesn't care how badly you want it. Just like the fish don't care. The fish don't know who you are. They don't care about your bills. They don't care about your losing streak. They don't care that this trade has to work. They move based on currents, temperature, oxygen, instinct, and conditions that exist entirely outside of your personal world. And the market is exactly the same. Price doesn't move because you need a win. Price doesn't move because you studied hard last night. Price doesn't move because you're confident or scared. Price moves because of liquidity, positioning, flows, imbalance, and human behavior aggregated across millions of participants, completely indifferent to you. And this is where most traders lose the game before it even begins. They believe trading is about control, about prediction, about forcing outcomes. But real trading, like real fishing, is about alignment. Every experienced fisherman understands one foundational truth. You cannot make the fish bite. You can't negotiate with them. You can't convince them. You can't intimidate them. You can't rush them. All you can do is prepare properly and place yourself in the right position when conditions are favorable. That's it. That's the entire edge. The fisherman controls his gear. He controls his bait. He controls when he shows up. He controls where he casts. He controls how patient he is. He controls whether he reacts emotionally or stays calm. But he does not control the fish. Now, let's translate that directly into trading. You do not control the market. You don't control whether price goes up or down. You don't control volatility. You don't control news releases. You don't control institutions. You don't control algorithms. You don't control macro events. And the faster you accept that, the faster trading becomes simpler. But most traders fight this reality. They open their charts already emotionally invested. They need something to happen. They want price to move now. They want confirmation. They want certainty. So they start chasing. Chasing breakouts that already happened, chasing candles that are already extended, chasing trades that don't fit their plan, chasing profits that don't belong to them. And then they wonder why trading feels exhausting. Let me tell you something important. Fishing is boring until it isn't. Trading is boring until it isn't. And boredom is not a problem. Boredom is a signal that you're doing it right. The moment you feel the urge to do something, that urge is not intelligence. It's ego. It's impatience. It's fear disguised as action. Professional fishermen don't confuse movement with progress. Professional traders don't confuse activity with profitability. They understand something beginners don't yet grasp. The fish come to you when conditions are right. The market offers opportunity when conditions align. Not when you demand it, not when you chase it, not when you need it. And this brings us to the first real shift you must make if you ever want to trade consistently. You must stop trying to control outcomes and start mastering preparation. Because preparation is the only thing you actually control. And in the next page, we're going to break down exactly what preparation means, why amateurs avoid it, and why professionals obsess over it. Preparation is the edge. What you control versus what you don't. There's a moment every serious fisherman remembers. It's the moment they realize that success has almost nothing to do with luck. From the outside, fishing looks random.
You see someone sit quietly for hours, doing almost nothing, and then suddenly they pull in a fish. To a beginner, it feels unfair, like the universe just picked a favorite. But the person holding the rod knows better. That fish wasn't luck, it was preparation expressing itself. The wrong rod would have snapped. The wrong line would have broken. The wrong hook wouldn't have set. The wrong bait wouldn't have attracted anything. The wrong location would have produced nothing all day. The catch is just the visible outcome of dozens of invisible decisions made long before the fish ever bit. Trading works the exact same way. Most people think trading is about the moment you click buy or sell. That's what they focus on. That's what excites them. That's what feels like real trading. But that moment is actually the least important part of the entire process. The trade is not the work. The trade is the result. And this is where most traders completely misunderstand their role. They believe their job is to predict, to forecast, to outsmart the market. But your job as a trader is much simpler and much harder at the same time. Your job is to prepare so thoroughly that execution becomes boring. Think about what you truly control in trading. You control your strategy. You control your risk. You control your position size. You control when you trade. You control what you trade. You control whether you follow your rules or break them. You control your environment. You control your mental state when you show up. That's it. Everything else is noise. And yet, most traders spend nearly all their mental energy on the things they don't control. They obsess over where price should go. They argue with the chart. They get angry when the market doesn't do what they expected. They feel betrayed by losing trades. They take wins personally and losses emotionally. This is like a fisherman getting angry at the lake because the fish didn't bite today. It makes no sense. Professionals separate preparation from outcome. Amateurs fuse them together. A professional understands this deeply. A good outcome can come from bad execution, and a bad outcome can come from perfect execution. And that realization is incredibly freeing. Because once you stop judging yourself by the result of individual trades, you can finally start improving. Here's a question most traders avoid because it exposes the truth. If I removed the P&L from your screen, would your trading still make sense? Would you still know whether you're doing a good job? Professional traders could answer immediately. Amateurs couldn't. Because amateurs use money as feedback. Professionals use process as feedback. The fisherman doesn't judge his day by the size of the fish alone. He judges it by whether he chose the right spot, used the right setup, respected conditions, and executed correctly. The fish is secondary. It's confirmation, not validation. Now, let's get very clear about something. Preparation is not watching more YouTube videos. Preparation is not adding more indicators. Preparation is not constantly switching strategies. Preparation is uncomfortable because it forces you to slow down. Preparation is boring because it happens off the chart. Preparation is looking at your data and accepting reality instead of fantasy. It's backtesting until you know your edge statistically, not emotionally. It's knowing your win rate, your average loss, your average win. It's understanding your drawdowns before you ever experience them live. It's knowing exactly what a valid setup looks like and what disqualifies it. A fisherman doesn't guess what a bite feels like. A professional trader doesn't guess what a setup looks like. They know. And because they know, they don't hesitate. They don't chase. They don't force. They wait. And waiting is the hardest skill in trading. Waiting feels like doing nothing. Waiting feels like missing out. Waiting feels like laziness to an undisciplined mind. But waiting is where the edge lives. Most traders lose money not because they don't know enough, but because they act when they shouldn't. They trade when conditions are unclear. They trade when they're emotional. They trade when they're bored. They trade when they feel behind. None of those are valid reasons to risk capital. Preparation creates boundaries. Boundaries tell you when not to trade. And if you can't consistently say no to bad trades, it doesn't matter how good your strategy is. It will eventually be destroyed by your lack of discipline. Here's the quiet truth. The market offers infinite opportunity. You do not need to catch everything. A fisherman doesn't try to catch every fish in the lake. A trader doesn't need to trade every move. The goal is not maximum activity. The goal is maximum quality. And this leads us to something most traders never develop: the ability to recognize where opportunity actually lives. Because once preparation is in place, once control is clearly defined, the next level is understanding positioning. Not where price is moving, but where price is likely to react.
Reading the water, where opportunity actually lives. A beginner looks at a lake and sees water, just water, flat, featureless, random. But an experienced fisherman sees something completely different. He sees depth changes, he sees underwater structures, he sees current lines, he sees temperature breaks, he sees shaded areas where fish rest, he sees places where food naturally collects, he sees zones where fish want to be. And here's the key difference. The beginner asks, where should I throw my line? The professional asks, where are the fish already gathering? That single shift in thinking changes everything. Because fish don't move randomly. They congregate in predictable areas based on survival and efficiency. They go where food is easier to access, where energy expenditure is lower, where conditions give them an advantage. The market behaves the same way. Price does not move randomly. Liquidity does not sit randomly. Reversals do not happen randomly. They cluster. And once you understand that, trading stops feeling chaotic and starts feeling readable. Most retail traders stare at price and ask, where is price going? Professionals ask, where is the money sitting? That's a completely different game. The market is not driven by lines and indicators, it's driven by orders, by positioning, by clusters of stops, limit orders, and forced executions. Price moves toward liquidity the same way fish move toward food. If you don't understand where liquidity is likely to sit, you're fishing blind. You're casting randomly and hoping. Let's be very clear here. Markets are designed to facilitate transactions, not to reward your analysis. They seek efficiency. They seek liquidity. Wherever there is a concentration of orders, price is attracted to that area. This is why price repeatedly revisits certain levels. This is why breakouts often fail. This is why obvious highs and lows get taken. It's not manipulation, it's mechanics. Now think about how most beginners trade. They see price moving quickly and jump in late. They see a breakout candle and assume continuation. They chase momentum without understanding context. This is like throwing your line into open water because you saw a ripple 5 seconds ago. By the time you act, the opportunity has already passed. Professional fishermen don't chase movement. Professional traders don't chase candles. They position themselves before the move. They wait near structure. They wait where reactions are likely. In fishing, structure matters. Rocks, logs, drop-offs, weed beds. These are places where fish naturally congregate, not because they're magical, but because they offer protection, food, and efficiency. In trading, structure also matters. Market structure, previous highs and lows, areas of imbalance, consolidation zones, places where price moved aggressively in the past. These areas are not important because of the lines you draw on your chart. They're important because of what they represent: unfinished business, orders left behind, participants trapped, liquidity waiting to be accessed. This is where professionals operate. They don't need price to be exciting. They need price to be interesting. Interesting means price is approaching a zone where behavior is likely to change. And when price enters those zones, professionals don't get excited. They get calm. Because excitement is for people who are guessing. Calm is for people who are prepared. Here's something you'll notice if you ever watch a truly experienced trader trade live. They don't react instantly. They observe. They wait for confirmation within their framework. They let price come to them. They're not hunting price. They're letting price wander into their territory. Just like a fisherman waits quietly near structure, line already in the water, prepared for the moment when conditions align. And when that moment comes, there's no hesitation, no second guessing, no emotional spike, no rush. because the decision was already made before price arrived. That's preparation expressing itself. Beginners feel stress when price approaches a level. Professionals feel clarity, and that clarity comes from repetition, from seeing the same behavior over and over again, from understanding not just what price does, but why it does it. Now here's the uncomfortable truth. If your trading feels frantic, chaotic, or overwhelming, it's not because the market is too fast. It's because you don't know where you're fishing. You're casting everywhere all the time. And when you fish everywhere, you catch nothing consistently. This leads to the next major difference between amateurs and professionals. Professionals don't move much. They don't constantly switch markets. They don't constantly switch time frames. They don't constantly switch strategies. They stay in their zone. They know their water. And because they know it deeply, they can sense when something is off. They know when conditions are favorable and when they're not. This brings us to patience, because recognizing opportunity is meaningless if you don't have the patience to wait for it. And patience is where most traders break.
Patience, boredom, and emotional neutrality. Watch a master fisherman long enough, and something strange becomes obvious. They barely move. No frantic casting, no constant adjusting, no emotional reactions. They cast their line, settle in, and wait. To an outsider, it looks boring, almost pointless. Hours pass with very little happening. But inside that stillness is total awareness. They're listening, watching the water, feeling the tension on the line, reading subtle changes most people would never notice. This is not laziness. This is discipline. And this is exactly what profitable trading looks like. The best traders I know are almost painful to watch if you're expecting excitement. They're not clicking constantly. They're not reacting to every candle. They're not glued to their screens with wide eyes and clenched jaws. They wait. They know something most traders don't yet understand. Action does not create opportunity. Positioning and patience do. Beginners believe trading should feel active, like work, like effort. They believe that if they're not doing something, they're missing something. So they overtrade. They enter early. They enter late. They enter out of boredom. They enter out of fear of missing out. And then they spend the rest of the session managing stress they created themselves. Patience is not passive. Patience is controlled restraint. It's the ability to sit in uncertainty without trying to resolve it with action. And that is extremely uncomfortable for most people, because patience forces you to face your own psychology. It exposes your need for validation. It exposes your fear of being left behind. It exposes your discomfort with not being in control. Trading is not hard because the market is complex. Trading is hard because it mirrors you. The market does not create your emotional reactions. It reveals them. This is why emotional neutrality is the real edge. Emotional neutrality doesn't mean you don't care. It means you care about the right things. Professional traders are not emotionally flat. They're selectively engaged. They don't celebrate wins. They don't spiral after losses. They evaluate. They ask one question and one question only. Did I execute my process correctly? If the answer is yes, the outcome is irrelevant. If the answer is no, the outcome doesn't matter either. This mindset is incredibly difficult to develop because we're wired to attach meaning to results. We equate winning with being right. We equate losing with failure. But trading doesn't work like that. A fisherman could do everything right and catch nothing. A trader can do everything right and lose money, and both outcomes are completely valid. This is where most traders break. They emotionally collapse after losses, even when those losses were expected. They question their strategy. They question themselves. They start changing things that don't need to be changed. Why? Because they're still outcome focused. They want certainty in a probabilistic environment, and that's impossible. Let me say this clearly. If you need emotional reward from individual trades, trading will destroy you.
because the market does not deliver feedback in a way that aligns with human psychology. It rewards consistency over time, not correctness in the moment. This is why boredom is actually a skill. Boredom means nothing is triggering you. Boredom means you're not forcing action. Boredom means you're waiting for your conditions. Professional traders are comfortable being bored because boredom is safe. Boredom protects capital, and capital is your fishing rod. Break the rod, and the game is over. Now, let's talk about something very few traders ever master. The ability to sit through a full session and take no trades and feel good about it. Not frustrated, not disappointed, not restless, satisfied, because you made the correct decision. This is one of the strongest signals of trading maturity. When you no longer feel the need to prove yourself to the market. When you understand that the market is not paying you for participation, it's paying you for judgment. A fisherman can do everything right and catch nothing. A trader can do everything right and lose money, and both outcomes are completely valid. This is where most traders break. They emotionally collapse after losses, even when those losses were expected. They question their strategy. They question themselves. They start changing things that don't need to be changed. Why? Because they're still outcome focused. They want certainty in a probabilistic environment, and that's impossible. Let me say this clearly. If you need emotional reward from individual trades, trading will destroy you, because the market does not deliver feedback in a way that aligns with human psychology. It rewards consistency over time, not correctness in the moment. This is why boredom is actually a skill. Boredom means nothing is triggering you. Boredom means you're not forcing action. Boredom means you're waiting for your conditions. Professional traders are comfortable being bored because boredom is safe. Boredom protects capital, and capital is your fishing rod. Break the rod, and the game is over. Now, let's talk about something very few traders ever master. The ability to sit through a full session and take no trades and feel good about it. Not frustrated, not disappointed, not restless. Satisfied, because you made the correct decision. This is one of the strongest signals of trading maturity. When you no longer feel the need to prove yourself to the market. When you understand that the market is not paying you for participation, it's paying you for judgment. A fisherman doesn't feel embarrassed going home empty-handed if conditions weren't right. A professional trader doesn't feel embarrassed closing their platform because there was nothing to do. They know that forcing trades is how accounts slowly bleed out. Every unnecessary trade is a self-inflicted wound, and the market offers unlimited opportunities to make mistakes. Avoiding those mistakes is a skill. Here's something I started doing that changed my trading completely. I began tracking my no-trade days. Days when I showed up prepared, waited patiently, and walked away because my setup never appeared. Those days became a source of pride, because every trade I didn't take was capital preserved, and preserved capital is future opportunity. If you cannot sit still, trading will teach you to suffer, because the market does not care about your restlessness. It will gladly take your money for it. And this brings us to the next critical shift. Once you can wait, once you can remain emotionally neutral, once boredom no longer scares you, you must choose what you will wait for, because not all opportunities are equal. And this is where specialization becomes non-negotiable.
Specialization. Why masters fish for one species. Walk into any serious fishing community and ask a simple question. What do you fish for? You won't get vague answers. You won't hear anything that bites. You won't hear whatever looks good that day. You'll hear specifics. I'm a bass fisherman. I specialize in fly fishing for trout. I target deep water tuna. I fish marlin offshore. These people are not limiting themselves. They're focusing, because they understand something that beginners don't. You cannot master everything. Each species behaves differently. Each species feeds differently. Each species reacts differently to weather, season, depth, and bait. Trying to fish for everything at once is a guarantee that you'll understand nothing deeply. And yet, traders do this constantly. They trade stocks on Monday, crypto on Tuesday, Forex on Wednesday, options on Thursday, futures on Friday. They jump between scalping, day trading, swing trading, and investing based on mood, recent results, or whatever looked exciting on social media that week. They are fishing in every lake, every ocean, every river with every rod and wondering why they're not consistent. Consistency comes from familiarity, and familiarity only comes from repetition in a narrow domain. Professional traders don't know everything. They know one thing extremely well. They've chosen a specific market, a specific time frame, and a specific type of behavior to exploit, and then they repeat it over and over for years. This repetition builds something far more valuable than knowledge. It builds intuition, but not mystical intuition, pattern recognition, the kind that only comes from seeing the same thing hundreds and thousands of times. A bass fisherman doesn't need to consciously analyze every ripple. He feels when something is right, not because he's guessing, but because his brain has cataloged countless similar situations. This is how trading mastery actually develops, not through constantly searching for new strategies, but through deep immersion in one. Here's the uncomfortable truth. Most traders switch strategies not because their current one doesn't work, but because they haven't given it enough time to work. They expect results before expertise. They want confirmation before competence. They abandon systems during normal drawdowns because they mistake variance for failure. But every edge goes through periods of underperformance. Every. If you switch the moment things feel uncomfortable, you will never experience the long-term expectancy of anything. Specialization forces you to sit with discomfort. It forces you to learn the nuances. It forces you to separate emotional reactions from statistical reality. And this is where real edges are built. Let me be very clear about something. Specialization is not about restricting opportunity. It's about increasing depth. When you know one setup intimately, you start noticing things others don't. You notice when conditions are perfect. You notice when they're marginal. You notice when to size up. You notice when to walk away. This level of clarity is impossible if you're constantly switching. Depth beats breadth in trading. Every time. There's a reason professionals sound boring when they talk about their trading. They say things like, I trade one setup, I trade one session, I trade one market. And they say it without apology, because boring is profitable. Excitement is expensive. Here's a question that might make you uncomfortable, but you need to ask it honestly. How many different strategies have you tried in the past 6 months? If the answer is more than one, you haven't actually tested anything. You've sampled, and sampling creates the illusion of progress without the substance of it. Bruce Lee said something that applies perfectly here. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Markets reward mastery, not curiosity. Choose one thing, one setup, one time frame, one market, and commit to it. Not for a week, not for a month, for long enough that your results actually mean something. This is how you stop guessing and start knowing. And once specialization is in place, something powerful happens. You stop reacting. You start anticipating. You know when conditions are right. You know when they're not. And most importantly, you stop taking losses personally, because you understand the final piece of this puzzle. Losses are not failures. They are part of the system. And that's what we're going to talk about next.
The fish that got away. Why losses mean nothing. Every experienced fisherman has a story. The one that got away.
The massive pull on the line, the fight, the adrenaline, the moment when it felt guaranteed, and then nothing. The hook slips, the line snaps, the fish disappears back into the depths. Does the fisherman sit down and question his entire identity? Does he throw his gear into the water and declare fishing a scam? Of course not. He shrugs. Maybe he replays the moment. Maybe he learns something. Maybe he changes his knot or his timing next time. And then he casts again. Because he understands something fundamental. Not every bite becomes a catch. And this is where trading psychology completely collapses for most people. They believe that if a setup is good, it should win. They believe that following rules should guarantee profit. They believe that discipline should be rewarded immediately. But trading does not work on moral logic. It works on probability. And probability does not care about fairness. Let me say this clearly. You can do everything right and still lose money. That is not a flaw in trading. That is the nature of trading. If your strategy has a 60% win rate, that means 40% of your trades will lose, not because you messed up, not because the market is against you, but because that is how the math works. Those losses are not mistakes. They are the cost of doing business. They are the fish that got away. And if you can't emotionally accept that, trading will feel like constant punishment. This is the hardest shift for most traders, separating execution from outcome. Most people are emotionally wired to believe that good behavior should produce good results and bad behavior should produce bad results. Trading violates this belief constantly, and that creates cognitive dissonance. So traders try to eliminate losses. They tweak strategies endlessly. They add filters. They avoid taking valid setups. They reduce size at the wrong time, all in an attempt to avoid feeling wrong. But here's the paradox. The more you try to eliminate losses, the more you destroy your edge. Because every edge includes losses. You cannot remove them without removing profitability. Losses are not signals that something is broken. They are signals that you are participating in a probabilistic system. And once you accept that fully, something remarkable happens. Losses stop hurting, not because they disappear, but because they lose meaning. A loss becomes data. A loss becomes feedback. A loss becomes just another repetition in a long series. Professional traders don't experience losses as emotional events. They experience them as expected outcomes. They already know losses are coming. They've planned for them. They've sized for them. They've accepted them in advance. This is why risk management is not just technical, it's psychological. Proper risk sizing ensures that no single trade matters emotionally. If one loss can ruin your mood, your confidence, or your week, your size is too big, period. A fisherman doesn't tie his entire livelihood to one fish. A trader shouldn't tie his self-worth to one trade. Here's where most traders go wrong. They say they understand probability, but they don't feel it. They intellectually accept that losses happen, but emotionally they still resist them. And resistance creates suffering. You feel cheated. You feel frustrated. You feel angry. You feel the urge to get it back. That urge is deadly. Because the moment you try to make back money, you are no longer trading. You are gambling. And gambling always ends the same way. Let me give you a simple test. After a losing trade, do you feel the urge to immediately take another trade? If yes, that loss is controlling you. Professional traders don't rush after losses. They pause, they reset, they return to neutrality, because they know there is always another opportunity. The lake is full of fish. Missing one means nothing. This mindset creates resilience. It allows traders to survive drawdowns without self-destructing. It allows them to stick with systems long enough for the edge to play out. And this brings us to a powerful realization. The goal of trading is not to win trades. The goal is to execute well enough for long enough. Winning is a byproduct. Now, there's one more situation where this lesson becomes even more important. Days when nothing happens. Days when there are no bites. Days when you sit there and go home empty-handed. Most traders completely mishandle these days, and that's what we're going to talk about next. In page 7, we'll break down why no-trade days are not failures and why learning to do nothing is one of the highest-level trading skills.
No bites today. The power of doing nothing. There are days when a fisherman does everything right. He wakes up early. He checks the conditions. He brings the right gear. He goes to the right spot. And still, nothing. No bites, no action, no reward. He sits there for hours and goes home with an empty bucket. Is that day a failure? Only to someone who doesn't understand the game. Experienced fishermen expect these days. They don't fight them. They don't force them. They don't take them personally. They understand that nature operates on its own schedule, and so does the market. Some days, the conditions simply aren't right. Volatility is too low. Structure is unclear. Price is choppy. Nothing aligns with the plan. On those days, doing nothing is not weakness. It is mastery. But traders struggle with this more than almost anything else. They sit in front of their screens and feel pressure. Pressure to trade, pressure to participate, pressure to justify their time. So they lower their standards. They take B setups, then C setups, then things that aren't setups at all. They convince themselves that something is better than nothing, and that is how accounts slowly bleed to zero. The market doesn't punish ignorance as brutally as it punishes impatience. Some days the best trade is no trade. Some days protecting capital is the profit. But our psychology hates this. We associate effort with reward. We associate activity with productivity. So sitting still feels wrong. But professional traders are not paid for activity. They are paid for judgment. And sometimes the highest quality decision you can make is to close your platform and walk away. I want you to really hear this. If you cannot sit through an entire trading session, take 0 trades, and feel good about it, you are not ready for consistent profitability. Because that emotional need to be involved will eventually cost you everything. The market offers endless ways to lose money. Avoiding those ways is a skill. In fact, it might be the most important skill. Here's something that changed my trading forever. I started journaling my no-trade days. Days when my setup never appeared and I successfully did nothing. Those days became wins because every forced trade I avoided was money saved. Over time, I noticed something shocking. My no-trade days were just as important to my annual returns as my winning trades. Why? Because losses avoided compound just like profits earned. Capital preserved today is opportunity tomorrow. This is something beginners don't understand. They think trading is about finding opportunities. Professionals know it's about filtering them. Saying no 95% of the time so you can say yes with confidence when it matters. The market is always moving. That doesn't mean it's always offering opportunity. Movement is not opportunity. Alignment is. And once you internalize this, something shifts. You stop feeling behind. You stop feeling rushed. You stop feeling like you need to catch up because you understand the truth. There is no finish line. Trading is not a sprint. It's not even a marathon. It's a lifelong craft, just like fishing. The fisherman doesn't rush to catch everything in one day. He comes back, season after season, year after year, learning the water, refining technique, building patience, and slowly, quietly, consistently, the results come. Now let me leave you with this final image. Picture 2 traders. One is staring at his P&L, heart racing, chasing every move, forcing trades, needing the market to give him something today. The other is calm, prepared, selective. He waits. He knows his setup. He knows his edge. He knows himself. He doesn't need to trade today because he knows there will always be another day. One trader jumps into the lake chasing fish. The other sits patiently with his line in the water. Only one of them eats consistently. So stop chasing profits. Stop splashing around in the market. Prepare better. Position yourself. Wait patiently and let the opportunities come to you.
Because trading, just like fishing, rewards those who respect the process, not those who try to force the outcome. If this video helped shift how you think about trading, do me a favor. Like the video, subscribe to the channel, and share it with someone who's still chasing trades instead of mastering the process. More lessons like this are coming.